All right, all right. Ready to rock and roll. Here we are. Let's do a little day trading today. See if we can't make a little bit of money to add to our portfolio. That's the whole idea of coming in here and day trading, right? Make some money so that you can invest that money into something else. A lot of people just want to trade and make money day trading and then go spend the money. Now, you can do that too if you want to, but we're trying to build ourselves a long-term portfolio so we don't have to trade time for money. And when you day trade, that's what you're doing. You're trading your time for money. So, in my opinion, the whole idea of day trading is coming in here, earn a little bit of money, and then take it and put it somewhere else so that you can build yourself a UBI, what I call a universal basic income portfolio, right? And so today is Wednesday afternoon. This is Power Hour, 1 hour before the market's going to close. Market's been moving a little bit. You can see this is a nice move here in the S&P 500. But on Tuesdays and Thursdays, this is my summer schedule. Usually we do every single day during the school year. I'm a school teacher and we teach finance at the university, so down at Utah Tech University. And you can join us there if you would like. But the whole idea is to come in here during the summer schedule, have a little bit lighter schedule. We're not going to sell in May and go away, but we're going to be a little bit lighter. All right. We're going to do a little bit lighter schedule in the summertime. So Tuesdays and Thursdays, 8 o'clock in the morning, Mountain Standard Time, we're going to have our stock investing class. That's where we're going to focus on building up a universal basic income, something that is a portfolio that's just going to make money for us and we can just live off of it. All right. So we can replace our income. That's the idea. We don't want to be replacing time. We don't want to be doing time for money when we're 85 years old in here trying to day trade, 90 years old. Not that you can't, you certainly can. If some of you guys are 85 years old and you're in here trying to day trade, that's perfectly fine. Not saying you can't come and do that. I'm just saying that, let's try and take some of the money that we make here and put it into a place where we can have it grow for us and give us dividends. And that's really the name of a UBI, Universal Basic Income Portfolio, right? It's a nice dividend growth fund. So that's just kicking out money, giving us a paycheck every month. And those are nice. Those are nice to have. So come on Tuesdays and Thursdays in the morning at 8 o'clock. That's the point I'm trying to make here, is that you can come and join us for that and learn how to do that. And then during the summertime, just once a week, Wednesday afternoons, we're going to do a little day trading in Power Hour. Okay. And then when fall comes and the university classes, I'll kick back in. We'll start going every day and we'll change the schedule back up a little bit more. We'll have 2 days of day trading and 3 days of stock market investing. So, all right, here we go. Let's get started. The first thing we want to do is I want to come in and show you that I do have a schedule for the summer classes. All right. So this is our summer schedule. This is week 1. And we're talking about the weekly objectives is the universal basic income. That's what we talked about yesterday. If you missed that class, go take it. We want to practice chart setups with trend lines and VWAP. We want to learn what the VWAP is. And that's something that we talk about here because it's on an intraday chart. And then we have identify seasonal strengths and utilities and staples. Okay, so we're going to talk about seasonals tomorrow morning, 8 o'clock. So come and join us for that. It's going to be a lot of fun. We like the seasonal nature of markets as the recurring price patterns that occur year after year after year. And so we have some very strong seasonal patterns that occur in the middle of the summertime. So sell in May and go away isn't necessarily the rule that we follow when we're doing the seasonals, because there's certain seasonal trends that happen during the summertime and we want to take advantage of those. All right. So that's what we're going to do tomorrow. Today, I want to talk about the markets. I want to kind of just give you a quick introduction. We're going to go in here, go to this other one, summer class, YouTube class curriculum. We're going to come in here, and Tuesday is the intro to UBI. We did that yesterday. Today is Wednesday. It's the basic day trading setups, trend lines, VWAP, momentum confirmation. I'm going to talk a little bit about the day trading, get you introduced to it today. And then on Thursday, again, we're going to go into the seasonals. All right, so that's our follow-up, and that's our schedule. So let's flip on back over here. Let's remove this and get this back in. There we go. All right, let's bring it full screen, make as big as we can. All right, so this is what we're going to do on the day trading. Now, I like to day trade in the futures market. All right, now we have 2 big central markets. We have one in Chicago and we have one in New York. Okay, in New York, it's hard to day trade. Why? Because they have all these day trading rules, pattern day trading rules. You might have heard of them. You got to have 25,000 as a minimum, 25,000. So if you don't want to drop 1 penny below that, because they'll shut your account down for 90 days if you try a day trade with less than 25,000. So you better start with at least 30,000 to day trade. All right. So go ahead, go out there and get yourself $30,000 to day trade in the stock market. Well, I don't have $30,000 to dedicate to day trading in the stock market. Some of you have lots of money in the stock market, so it's not an issue for you. No big deal. But if you want to day trade without having to have $25,000 or $30,000 dedicated to a day trading account, you can come and do that in the futures market. Now, in the futures market, this is out of Chicago. So in Chicago, we don't have pattern day trading rules. All right. So remember, two big financial centers in the United States, one's in New York, one's in Chicago. New York, you need to have pattern day trading rules because you're trading all the stocks. All right. Apple, Amazon, Netflix, Google, all the stocks that you're aware of, right? Caterpillar, Meta, all kinds of fun things. Over here in the futures market, no pattern day trading rules. You can open up an account with as little as, $3,000, $5,000, $2,000, something like that. And you can get yourself started doing a little day trading over in the futures market, and they don't care how many times you trade with a small account. It's up to you, right? Now go, trade to your heart's content. Nobody cares. It's the last bastion of true capitalism on earth today over here in the futures market. Now, that's what we got up here on the screen. The thing about trading is that you got to have software that accesses the futures market. So let me show you the software I'm using.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, so we're going to go through, and you're going to use Track and Trade to access the futures market. All right, they got two versions here. I'll pop this one up here too. I think I got a little picture. Here you go. Watch.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N.
All right, so that was same ad, just different picture. I wanted to show you the picture so you can see that there's two versions. There's the red version for futures. There's the blue version for the stock market. So again, we're going to be using the futures version to day trade with because there's no pattern day trading rules. Now, the thing about the futures version out of Chicago is that you can't go trade Apple and Amazon and Netflix and Google and all those fun things. Those are not there. But we do have the indexes. All right. So we have the S&P 500, we have the Russell, we have the NASDAQ, we have the Dow Jones. Those are all tradable over in the futures market, and you can trade those. And we like to trade those because they have a lot of volume, a lot of open interest. They have a lot of movement in the market. Usually they're kind of dead right now, aren't they? Boy, look at how dead this little thing is. It's kind of dead. So we're had a nice move there, had a little dead spot here, and then it took off like a rocket ship, didn't it? I call those, I have a special name for those. It's just a price correction where it went from one dead market up to another dead market. That's just like one big firm did a buy. They're like, hey, we want to go long. Okay, all right, go over there and buy some. Man, it just went up. It wasn't an active trading event where a lot of traders, that's probably one guy. It was probably one hedge fund that needed to get long in the market for one reason or another. They probably went to a meeting. That's how it works in the hedge funds. They go to a meeting and they're like all sitting around a table and they're like, hey, we need to be this guy here sent in his order, and this guy over here, he says that we need to be long the S&P 500. He wants to have this many shares of the S&P 500. So after this class is over, after this meeting's over, board meetings, can you go downstairs and buy some of those for us? And that's how they do it. It's like, okay, they go down the markets. They don't care. They just need to get the shares. And the market goes, and just like that. And then it's dead again. That's just because a big firm came in and had to buy some shares. The problem with that is you get all excited and you're like, oh, the market's going to try. Oh, and then you start trading and then you start trying to get in on the next run, right? You're like, oh, I'm going to take the next rally up. And then you tell, I'm going to take the next rally up. Now I'm going to take the next rally up. And it doesn't ever happen. And well, this is what we call 3 times the charm. So you get charm 1, charm 2, charm 3, and oftentimes it'll go on charm 3. So we can come in here and give it a shot. We'll see if we can grab a little bit of shares in here on this charm 3 just to see if charm 3 wants to go. We'll see. Sometimes you get charm 3 and it'll go again, but usually it's just dead. So these are all called A1s. All right. We call them A1s. They're all A1s, the first breakout, and then they fell. So the next one is an A1 and it fell. And the A1. All right. So then we got an A1 here, and this is called an A1 here, and it's called an A1 because we have odds, all right, on these things. And that's why I always tell you, don't chase the A1s. Why? Because A1s oftentimes fail. So you get lots of false A1s. All right. So don't chase the A1s. Don't always try to go in on every single A1. This is the third A1. So it's another pattern. It's called 3 times the charm. So you get 3 A1s in a row, then maybe you can take one. All right. You take the third one. So then it oftentimes will go at that point. Well, we'll see. I don't know. Nobody knows if it's going to actually go. You just have to put your order in and see if it goes. If it doesn't, then you don't go. So what we do is we wait until we get an A2. So an A2 is when the market has a tendency to come in here and goes like this. It comes up here. It goes up, fakes you out, comes back down. Goes up, fakes you out, comes back down. Goes up, fakes you out. And then on the third time, it goes up and makes a nice rally, and then it pulls back and then it goes again. And that's the one where and this is where we get in right here. This is called the A2. All right. So the A drive is the one big drive. Turn off the auto scale. There we go. All right. So, and then the market has its drive one, and then inside the drive one, we get three little drives like this. So then we get another little pullback and another little drive, and that's where we come in here and we call this the A1 down here, right? We get lots of false A1s, and then this one in here, this becomes the A2. I know I'm getting a little crazy here. This is the A3. All right, so that's how it works. Then it breaks down, makes a little ABC back down. Then we start the other third drive and try to get that. Let's see, it failed again anyway. But if you don't give it a shot, you don't know, right? Nobody knows what it's going to do. You have these little patterns that are repeating patterns, and you try and take them and you see what's going to happen. You never know. This is getting a little down arrow here after that third time's a charm. Maybe that's the reversal, and this thing's going to flush like a toilet now. And we're going to miss it because we were looking to go long. Because of this drive here, we thought, well, maybe we'll get another up, and we're going to get another down. Okay, well, let's see what happens. We'll watch it for a minute while we talk about the overall longer-term stock or futures market. So in the futures market, you have these different indexes, and we like to trade the indexes because they have lots of volume, lots of open interest, lots of activity. They usually trend pretty well. All right, so for me, I have special settings. I like to have my charts set in what we call range bars. Now, different range bars, we use different range bars for different time frames. So, for example, up here you see on the NASDAQ, we got range bar 25, we got a range bar 50. What is a range bar? Well, a range bar doesn't have time involved. All right, no time involved. It's just the trend itself, all by itself. So one bar, being a range bar 50, means that the market has to move at least 50 minimum moves, 50 ticks, before it'll make a new bar. And that might take an hour, it might take 10 minutes, it might take 2 seconds. All right, you don't know. So there's no time involved. It's just how much the market's moving and how much trend. And I like those. That's a nice way to trade. But I also like to put on what we call Heikin-Ashi. Heikin-Ashi is kind of a smoothing component. So if I turn off Heikin-Ashi, you can see that each bar is the exact same size, right? It's a range bar 50. So on this particular chart, which is the NASDAQ 100, which is the 100 largest stocks on the NASDAQ exchange, right? This is an index called the NASDAQ. So you can see that each bar represents 50 minimum moves, and then it moves to the next bar. Now, the red and green, of course, is if it's red, it closed lower than it opened. If it's green, it closed higher than it opened. All right, so that's the difference between why you have green bars and red bars. So you can see this is all green, 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 green. That means their market is closing higher on this bar than it opened, and then it closed higher, then it closed higher, then it closed higher, so it closed higher. That's why you have all these green bars, indicating that we're in kind of a trend, right? Now, I like to use Heikin-Ashi. It's kind of a smoothing component. I call it, kind of little cheat codes. And I like to turn them on because what it does is it kind of smooths. It's kind of a smoothing component. It's kind of like a moving average, but it's added right to the bars themselves. And in Track and Trade, you just click this little button right here. And if you don't have that button, it's because you have to right-click right here, customize your toolbars. You come down here on the left-hand side, and it's a little HA in here. You just click on it like that, and hey, add it, and it'll move it over to the bar. And then I'm going to hit cancel on here because I've already got it, but it's right there, and that's how you customize your toolbars, and you put that little HA right there. All right, and then you can toggle that on and off. You just click it, and it goes on and off and turns those Heikin-Ashi smoothing component on. So there's a Heikin-Ashi bar. So this is a Heikin-Ashi range bar. Really kind of a unique price bar. You don't see a lot of people trading this. In fact, I haven't seen anybody else trade it but me. So they're just kind of, I call them cheat codes, because if you look at them, they just kind of they look like they cheat the market, right? I mean, look at how smooth and nice and clean. If you take that off, if you take off the Heikin-Ashi, well, that's just a normal range bar, a little bit more popular. You don't see a lot of people, again, doing the Heikin-Ashi range bars, but range bars really aren't that common either. And then to put Heikin-Ashi on a range bar, now you're really kind of getting weird. But to me, if you look at that, that's nice. I mean, that's a good looking chart. Now you can come down to the 1 minute chart, and this is what a 1 minute chart looks like. All right, now I got Heikin-Ashi turned on. Let's turn on. That's just a 1 minute chart. This is a typical 1 minute chart. Each price bar represents 1 minute time frame. All right, so 1 minute, 1 minute, 1 minute. So there is time involved, and you can see a little countdown timer up there. See, this is 0, 1. Okay, now that's going to give us a new bar every minute. So it's going to count down 57, 56, 55. So a little countdown timer up there is going to tell you when you're going to get your new bar, how long you're going to have to wait to get a new price bar. All right, so this is a typical 1 minute chart. And again, the green and the red indicates whether the bar opened higher or opened close on a 1 minute chart as well. And so that's kind of how most traders look at a chart. Most traders are going to look at charts like this. Now, I like to be a little bit different. I like to have the range bars. So we're going to come down here to a range bar. This is range bar 25. And then we got the Heikin-Ashi turned on to the range bar so that it's not just 25 bars. It's got a smoothing component added to it. All right. And it kind of gives you a little bit different view, a little bit different sense of what the market's doing. And you can see all these little flat bottoms. We like flat bottom bars for uptrends. We like flat top bars to the downtrend. If we get a lot of little topping and bottoming tails, you can see if we zoom this in a little bit more, you can see that there's lots of little topping and bottoming tails. When we get lots of topping and bottoming tails on the same bar, that's not good. That means that the bar is very indecisive. This is a very indecisive time right here. All right. So what we want is we want to look for the first flat bottom or flat top coming out of a bunch of sideways like that. So see that red bar, first flat top, that's an indication that the market's probably going to go down. So there you go. There's your signal. There's your sign. All right. Here's another sign right in here. There's a whole bunch of flat bottom. So this market was going sideways. See, right in here is going sideways. And then it came out of here with all these little tops. Turn off the auto scale. I don't want auto scale right now. So then we come in here, see how it's got top and bottom tails in there. And then suddenly we got a flat top and an arrow on that one. And that market started to flush down. And that's kind of a little signal on these Heikin-Ashi bars that kind of help you know when a good time to get into the market is. All right. And do they always work like that? No, not always, but there's one right there. So you got this kind of the market's coming down a trend. Oh, it broke down already. You get this a little topping and bottoming tail, and then another flat top. That's kind of an indication. Hey, let's take a short position right there and see if that little trend wants to continue down. Had we done so, well, we'd be making some money right now. Maybe make back some of the money that we lost when we thought it was going to go up. Right. So this is the NASDAQ. This is the Dow Jones. Let's go look at the Dow Jones. So we'll go to a range bar Dow Jones, and that's what the Dow Jones is doing with the range bar. And now I've got also on here a nice little indicator called the ATR, which is the average true range. Average true range, that's what those little dots are. And you'll see on the average true range, I've got those set to 0.8. That's a little aggressive. Sometimes I usually start at 1 and 1, just to 1 and 1. But if the market's moving a little bit, I like those little dots, which are my trailing stop locations, a stop to get me out of the market if I'm wrong, or into the market if I'm trying to get in. I'll tighten those down. You can make those stop factors a little bit closer if you want to. So you can bring them really tight if you want to. But you don't want them really too tight, right? Too tight's not good, and too loose is not good. You got to have kind of the happy medium. You don't want Papa Bear, you don't want Baby Bear, you kind of want Mama Bear in here. All right, get the porridge that's just right, not too hot, not too cold. And usually that's right around 7, 8, or 1. 1's a good start point, but if you want to make it a little warmer, put it in the microwave, warm it up a little bit, put it down there to 0.8. I like 0.8. Sometimes the markets are running pretty hard. I'll even go down as far as 0.6, all right? But 0.7, 0.8, usually pretty good numbers, all right? So I'm the seventh child in a big family, so 7 is my favorite number. I'm child number 7. Lucky number 7, right? So there we go. So this is how we come in here, and I'll put that on 7. Sometimes 8. 8's a little better, actually, than I have to admit. 7, but 7's good. 7's a little bit more aggressive, and so that matches my personality a little bit. I like a little bit more aggressive. So here we are. And that's what we're going to do. We're going to save that, update that on all our ATRs. Now, all of our stocks at this point, or all of our indexes are going to be set to 7. All right, see that right there, 1 and 7. Okay, so we got some flat bottom bars. The market's coming down. Here's a 3-drive pattern. Drive 1, you got your counter trend. You got your drive 2, you got your counter trend. We'll look for a drive 3. Is it going to make a drive 3? We don't know. It's just the probabilities are that is where this coming into a turnaround and reversing and going back up. So this is an ABC pattern is what we call that. Nice little A, B, C. Come right down to 100%. Now it's turned around, going right back up again. So you can take this and you can say, well, how far is it going to go up? Well, we can take this little tool and go from here to here to here. And we say, well, if it goes back up, there's 130.9, which is our golden ratio, 161.8, which is also a Fibonacci number. You can see I've got a whole bunch of moving averages on here. I'm going to turn those off, and I'm going to turn on a special moving average. I'm going to come in here, and we call it the VWAP, Volume Weighted Average Price. And the volume weighted average price is just an average of the price of the market over the day's time frame, and it takes volume into consideration. All right. So you can see it's way up here. So the average price throughout the day is that blue line. We oftentimes think of that blue line as like a rubber band. All right. So it pulls the market up to the rubber band. Because you ever played that little game where you bang a ball on a little paddle? and the ball goes way out here, and then it comes back and it keeps going back and forth, back and forth. Well, that's what the market does with that blue line. That's kind of like it goes over the top and then it pulls it back down. It goes underneath, pulls it back up, goes over to the top, pulls it back down. So think of that as a rubber band, and the market's a ball that's kind of just being flipped back and forth. And as it further it goes away, the rubber band gets pulled tighter as it pulls it back to the blue line. So think about that. So that's how you kind of think about the VWAP. It's kind of like a rubber band, and it just keeps pulling the ball back towards it. All right. This market's trying to make another little break here. There we go. We can jump in on that rally, see if it's not going to go back up and hit that blue line up there. Come on, buddy. Come on. We got in on this little break right here. So this market had a little break that those yellow dots. Kind of got in a little early, didn't I, before the dots flipped. But there's the nice trend up. There's the counter trend. And at this point, we're going to look for it just to make another trend back up. We want to see it go. Come on. Oh, it failed on us. I thought we might get another trend back up to the blue line, and it didn't do it. Well, there's a flat top. If that thing fills out, we can take the short position. But see, it tried to give us an arrow up. It might just be dead. What's it going to do? We'll try it. We'll give it another shot. Hey, if you don't, oh, wow, that market went too far. We got in a little late on that one. That's not very good. Let's put this right in just inside there. See if we can't make a few pennies. We're getting our heinies handed to us today. Not paying a lot of close attention. We're just kind of chatting and talking and trying to get a few trades off along the way. But you get the idea. All right. So some of the other things I want to talk to you about. So we got the Dow Jones in here. We got the NASDAQ. We got the Russell. And we got the S&P. And none of the markets really. Look at this. S&P's dead. Had that one little nice move right here, and then it's died in here. Just going sideways. Can't make the market move for you. I can show you all the neat little tools to make you get in and out and show you all the chart, but I can't make the market go up and down. We try, don't we, guys? We got our voodoo dolls here. And these guys are really good at making the market move. That's about as much power as I got in making the market move. And if I'm in the market and it doesn't move, I jab that guy in the neck like that. And then that usually makes the market move in my favor. So that's the power I've got to make these markets move. All right. So let's come in here. And I wanted to show you some other things that are really cool to get you started. And some of the other things are that we got other things that we can trade. All right. So we come in here. This is a list of the things we can trade in the futures market. So we got the Australian dollar. So if you're into currencies, Forex, some of you have heard that word before. If you're into Forex, you got the foreign currencies in here. We got Canadian dollar, British pound. You got Bitcoin. You can come in here and trade Bitcoin if you want to. So we can pull up Bitcoin, and there's Bitcoin. And you can see that I got Heikin Ashi turned on, and we're looking at Bitcoin. This is the daily chart. Looks like Bitcoin's kind of coming back a little bit, isn't it? So we got a nice little downtrend here over the last 3 months, and that we are very well aware of. And then the market started to rally. So we got a nice little uptrend up in here. And then we got a little pennant formation right here where the market's kind of going like that. And looks like it's trying to break and move higher once again out of that little trend. So that's kind of a little buy signal on Bitcoin if you wanted to get into some Bitcoin. All right. That's the daily chart though. So if we come in here and we come down to, let's go to the 2-minute chart. And we'll just see what the Bitcoin's doing on a 2-minute time frame. Now you can day trade Bitcoin. And again, you don't need to have $25,000. Now, this is a 2-minute chart with Heikin Ashi. If I turn off Heikin Ashi, you can see that's your regular 2-minute chart. That's the Heikin Ashi version. So you can see we just draw some trend lines in here. And we just like to draw trend lines underneath support or above resistance. All right. Support on the bottom, resistance on the top. And then as it breaks those trend lines, that's where you kind of anticipate a change in direction. So you get just one up for every down. If you notice that, you just notice that the market makes one up for every down. And so one up here, and then this is kind of a long down here, and then a little up here, and a little down there. And you'll notice that the average true range of those little yellow dots kind of tell you which side to draw your trend lines on. So draw your trend lines on the side of the little yellow dots, all right? So this is the yellow dots are on the other side. They flipped right here from underneath to upside. So this is actually kind of like that. And then this is on the downside. So if we wanted to put an order on Bitcoin, we can come in here, and I've got multiple types. Or you can just hit sell market, just like that. Just hit sell market, and then you make money on the way down. Now, I know that's called going short, and that's confusing to a lot of people, where they're like, "Oh, how can you sell something you don't own?" Well, just don't worry about it. We'll go into it in another class, but they let you do it. So the name of the game is to buy low, sell high, but you can sell high first and buy back low later. It's called shorting the market, and they just let you do it. So the idea is like, I don't know how I'm going to sell something I don't own. Don't worry about it. You're just going to buy it low or later, and that's how you make money, right? Oh, yeah, it's easy to buy low and sell high. People understand that, but that's the same thing. Sell high, buy low. We're just going to switch the time frame of when it happens. All right. So they just let you do it in the futures market. Don't worry about it. And they let you do it in the stock market too, in some cases. But in the futures market, you can do it in all cases. They don't care. Just make sure that you buy it lower than you sold it. That's the name of the game. Buy low, sell high. You can sell first, buy back low later. All right. So the market's starting to fall, and we can put our stop order in here. Watch, this is a drag and drop software. So you come in here, you drop it on the screen, you right click on it and say, hey, I want you to trail on that little yellow dot, which is the ATR. So we say ATR. Say okay, and it's going to trail down that little yellow dot, and it'll just follow that little yellow dot. Now we don't have to do anything. We can go cook eggs or whatever it is we want to do, and it'll sit there and trade for us. So that's a neat little tool, neat feature. We're only in the market with one contract. Now in the futures market, that's another thing. We don't use shares. We use contracts, and that's a little strange for people to get used to. But think about it as a contract is like a bucket. All right, you got a bucket or a cup, and inside that cup you can put anything you want. And so inside that cup is one contract. So think of the cup as one contract. And then if you drink the cup, let's say it was crude oil. All right. Crude oil is measured in barrels, right? 55-gallon drums. So it's done in gallons, really, right? How many gallons? 55 gallons in one barrel. So this is how we measure crude oil. And so crude oil is however much crude oil we can fit in this bucket is one contract. But what if we're going to trade corn? Well, corn is not traded in, it's not liquid like that, right? It's not something you can pour, you can't drink it. You can't drink your corn. I guess you can if you distill it, but this is not distilled corn. All right. So now you have to do it in bushels because corn is measured in bushels. So how many bushels can we put into the bucket? All right. And that's one contract. So how many bushels in there is one contract? How many ounces of gold is in there is one contract. How many gallons of crude oil are in there? That's one contract. How many pigs can we put in there? Pigs. We can trade pigs. All right. So how many pigs? We don't call them pigs. We call them hogs. You got to be professional about it, right? So how many pigs can you put in one bucket? And that's how much your bucket is. So that's why we don't use shares, because we got to have, different things are measured in different ways. Right? Pigs are measured in pounds. How many pounds of pigs do you have in there? All right. It's dead pigs, of course. Some pig, you got to eat them. Right. And then we got live cattle and we got feeder cattle. And the way you know about that, how many feeder cattle go into one bucket? That's a contract. How many live cattle go into one bucket? That's a contract. So because everything is measured in different ways, we can't just use shares. So we have to use a different method, and that's why we use contracts. So whenever you trade one contract, and that's the minimum quantity, and the minimum quantity is how many ounces of gold are in one contract. That way it makes it easy. All right. And just for funds, just so you know, live cattle are dead and feeder cattle are alive. All right. Live cattle, those are the ones that you eat. All right. Those are the already killed, already dead, hanging on a rack in the meat packing plant. So live cattle are dead. Feeder cattle are the little baby ones out there in the field getting fed. So they're alive. So feeder cattle are alive. Live cattle are dead. Okay. So that's something about the futures market not a lot of people know. Okay. The other thing that we need to know and we need to understand is that we can come in here in the charts and we can see all kinds of fun things to trade. So we're trading right now. We got Bitcoin going. And since Bitcoin is going all by itself, we don't have to stay here on Bitcoin. It can trade all by itself and we can go to something else. So we can come over here and look at NASDAQ, and NASDAQ's over here. And if we want to put an order on NASDAQ, we just come in here. We're going to do the same thing. I just want to show you. We're going to go say, well, which way is it going to go? We don't know. It looks like it's going to bounce sideways. So we'll probably get knocked out again. But you don't have to sit here and watch it. once you get in. Now these little buttons down here, see, if I want to trade, like for example, if I come back here to Bitcoin where we're actually making some money, I have a trailing stop that's trailing down automatically on those little yellow dots as the market falls, right? And so that's moving all by itself. Now I had to do that in two setups. So I had to come in. Maybe it's better to come. Let's go find something that we can trade. All right, so here we go. This market's falling. So we're going to come in here and we're going to say, if I go sell, right, and then I have to put a stop order in there. I have to drop that in there, and then I have to program it. So I have to right click on it and say edit, and I want it to trail on the ATR. I hit OK. Now I've got those two buttons, and that's, that happened. That was all one fell swoop sequence. But I've got these buttons where I've just programmed that in. So if I come in here and I right click on it and come down to 777, these are the settings, just like you saw before, only it's for this QOCO button, so I can program that in there and make it do it all by itself with one fell swoop. Now, I don't expect you to be able to do that right off the bat. You might have to take you a little bit of practice to do this, but you can see I've done that, and I got a whole bunch of them in here. I can select. I like this one, or maybe I want it to do that one, and it's just a pre-programmed button that I can program in there to make it do what I want. Now I have a buy button and a sell button. So if the market's going to go down, I can hit sell. It automatically puts my stop in there, tells it to trail the ATR. I'm in the market short. And down here, you can say I got a limit order. I can put the limit order wherever I want. So that gets me into the market. See that? I got stopped out. So that protected me against the market going the wrong direction. So now if I think it's going to go up, I can hit buy, and it puts me into the long market. And the little yellow dot comes to the other side, and it jumps the stop to the little yellow dot. I got my limit order. I can put my limit order wherever I want to take my profits, and it kills the whole thing if you get stopped out, or if it hits the limit order, it takes my stop off, hits the stop order, takes the limit off. And so that's a real nice way of programming your buttons to just do a whole bunch of things at one time. So we think the market's going to go up. You see, you got the little dot right there. If you think the market's going to go up, you could hit buy, and the stop would immediately jump to that little dot, place the stop for you. Here we go. Watch, we'll do it. See how it jumps, drops the stop. Now I told it to put the stop in here. 777, I came in here and I told it to put the stop back at 100. But then I also told it to trail on the ATR. So it drops at 100 and immediately jumps to the ATR. That's pretty cool, right? It's kind of like pre-programmed buttons. And you can just come in and program these buttons to do just about anything you want. So there it is, little dots right there. I can hit sell now, drops my stop to the sell button. And then if the market would fall, this would be my target to where I could take some profits off. And the market's just dead. It's just bouncing back and forth across the little yellow dot. So we're not having any fun here, but at least we're learning, right? That's what this is all about. So this is a 1 minute chart, 1 minute chart. Let's say right there, we think the market's going to continue down. You come in here, you hit this button, it automatically drops. See how it drops the stop right to the little yellow dot? Now, if the market keeps going down, all it has to do is come down to wherever we want to put this. We can set this wherever we want. And if it comes down and touches that, it'll automatically take my stop off. If it goes up and hits me stop out, then I'll get stopped out and it won't continue down. But it's just going to trail those little yellow dots all the way down. See that? See how it trails the little yellow dots down these trends? That's nice. If you don't want it to trail, you can turn it off. You can come in here and say, well, I don't want to trail. You say edit and turn the trailing feature off. You say, okay, now it's not going to trail anymore. It'll just sit right there. All right. So lots of different ways to program your tools, and you can see it visually on the screen. It's called a visual representation of charts. Okay, so it's designed for the visual investor. That's what we say. Okay, so all right, let me come in here and I'm going to do a real quick thing here. Take that like that. All right, I'm going to save that just for class purposes. There we go. Desktop, save that. There we go. Okay, we got stopped out again. It came back and hit us. So we're not having a lot of luck here, but that's the name of the game. Let's come in. We can come in. We were looking at how are we doing on our Bitcoin. On our Bitcoin, oh, see how our trailing stop is trailing down? So if it turns around and starts to go back up, that'll just automatically stop us out at that blue light, or the yellow light. You're like, but Land, that's a long ways away. I would like it to trail closer. Well, you can trail on these little flat tops too. So you can come in here and edit, change it, and say trail instead of up here. This is trail. Instead of trailing on the ATR, I'm going to have it trail price bars back, and I'm just going to say 1 and hit OK. Now, see, it trails just 1 price bar back. So if this makes another bar, this will jump to 1 price bar back rather than clear back here to the yellow dot. Or I can come into the yellow dot, and as we were talking before, I can make that little yellow dot a little bit more aggressive, bring that in and make the yellow dot even closer than 1 price bar back. That would be all the way down to 3. So you can do whatever you want, see? So we can put that basically right at the same spot. About 5 is about the same spot. So now we come in here and go edit, and we come down here and we'll tell it to trail on the ATR, hit OK. Now it's going to go back to the little yellow dot. Next little dot that comes closer than where it's currently sitting, it'll jump to the next little yellow dot. And that's pretty cool, right? That's some neat stuff, man. Once you get in there, it just handles it. And you don't have to stay on this chart and watch it. You can go over and do some other stuff and get something going on another chart. Oh, here we go. Maybe we'll go short on this one. You just hit the button. Hit the button, land, and then away it goes. And if it keeps going down, you make money all the way down to there. And it tells you over here, $500. It says you'll make $500 if it goes down there and touches that little triangle. All right. Otherwise, it's just going to trail the little yellow dots down. Now I've got the little yellow dots on this one set to 7. You're like, that's too close. Okay, well, back it off. Now, it's not going to jump the stop backwards if you do that. The stop's going to stay there and wait for the dot to catch up to it. That's the way it's programmed. But it looks like we're going to get, let's pull this away. So, oh, we got stopped out. So the market's not following through for us. Let's see if it wants to go. Now, watch. This is another cool thing that you can do. Watch this. We'll come in here, and we got QOCO3 programmed in here. Oh, I don't want to do that. I want to do this. Oh, that's what I wanted to do. Exit chart. Let's just start over. We're going to come in here and drop this on there. And why is it not? Oh, it's trailing on the ATR. Delete that one. Sorry. We're going to trail on this little, on the price bars back. So just like we were doing, now we're going to trail. Now notice we're trailing with an open stop order. And the stop is way up here. And you'll notice the whole system all moves together as the market moves, starts to rally. And we're looking for a reversal to the downside. So as soon as it comes back and reverses and crosses that red line, that'll start to fall. And then this will jump to the first. We're trailing on one price bar back. So it'll jump to the first price bar back. And we'll catch the reversal going the other way. Maybe. Watch it take off and go to the moon now. Just because we're trying to catch the reversal. So I don't expect you guys to be able to do this right off the bat. It's just I want you to be aware that this is how we trade when we day trade over here in the stock market or over here in the futures market. This is how we do a little day trading over here, right? And you get good at this, and you can use these tools and these strategies to make some money. So let's go look and see how oh, look, this is looks like we're going to get stopped out here on our Bitcoin with a $26 profit. It'll go down a little bit, maybe $25 when it gets stopped out against that yellow dot. Unless it turns and starts to fall again, that would be nice. We make some more money. This is pending. See, it's still pending because it hasn't reversed yet. We should have been trying to catch the reversal on this yellow set of dots, huh? Then we'd be up right now. We just didn't get in there on time on that one. Let's go see if we can find another one. Oh, that might just fall. So we'll just hit this one there. See if it wants to go. There we go. And it jumped to the yellow dot. Now, if it just keeps coming down, maybe it come down, we'll test this down here. We'll see. What if it turns and starts to go back up, Lan? Well, then you hit your other button. So what we're trying to do here is just get to break even. We just want to get to the break even point. And we haven't had a whole lot of luck getting to break even today on any of these little shots we've taken at the market. We should be a little bit more focused if we're actually trading for real money. This is obviously a demonstration. But you got all your little trend lines in here. All right. So all your little trend lines coming in here like this. One up for every down. Just remember there's one up for every down. Almost. Sometimes the market gets a little screwy in it. There's not an up for every down, but usually there's one up for every down. Just don't know how far it's going to go up. You don't know how far it's going to go down. Oh, now it's going back up. You want to take every up and down? No, you want to kind of use some logic about whether the market's on its way up or on its way down. So we'll go exit. We think it's going to come down again some more. There we go. So we think it comes down. And that's a little ABC pattern. So you go A, B, C like that. And then we think it's we want it to come back down. There's 100%. We got our limit order take profits at 100%. Come on down. Do me a favor here and actually make a trend so we can have a good example. You dumb market. Now is it going to reverse and start to go back up? Possibly. Nobody knows. But if it does, you can put your order in there. Put our order in. There we go. We'll try and catch it on the way up. How far is it going to go? Well, maybe it'll go up and test that previous high. You put your limit there. If it touches that high, then you'll take your profits off. Sometimes we make a lot of money doing this. Sometimes not so much. Depends on how good you are at catching those turns. All right, let's go. Uh-oh, what happened to our Bitcoin? Uh-oh, we've got to see this one here. Oh, we got it. See that? We took it. So closed our profits out. That was a $310 move. About time we had a little bit of good luck here, wasn't there? Okay, one up for every down. So that's our down. Here comes our up. So the question is, how far down is it going to go? Is it going to turn around and make a big long down, or is it going to make a little short down and start going back up again? Well, nobody knows. But you can say, well, it looks like to me it's making ABC. This A, B, C, D. See, a little trend. Now maybe it'll turn and start to go back up again. If we get a little green bar in there, we'll take a long position. This is like a little pullback on its way up. Make a little ABC. Like here. Here's an ABC. A, B, C. Just like that. Okay, it's going green. Come back over here to our trading tab. Let's get rid of all these drawings so we can see what's going on. If that breaks those yellow, oh, didn't break the yellow dot. Now it's coming back down again. So that was what we call a little pennant formation right in there. All right. So oftentimes that's down. How a little small move and a bigger move down. You can take it if you want to. If you think it's going to continue down, but this market's not. Oh, wow. Oh, was that the 10-minute mark? Oftentimes at the 10-minute mark, the market shoots off and goes crazy. Just like that. Oh, look, it's coming back to the VWAP. Right to the VWAP. Now what's it doing? Got to the VWAP. Can't decide what. Man, alive. Something's going crazy on this one. NASDAQ. Let's go to range bar 50 and slow this thing down a little bit. Somebody got excited, didn't they? Let's go look and see if some of these other markets are moving. Oh, that took off. Let's go to a 1-minute chart. That's a 1-minute chart. 2-minute chart. Range bar 12. Wow. So we got how many drives? 1, 2 drives. 1, 2. We're going to get another one. Go in there. Try and see if it wants to go again. Got a couple of them in there. Come on. Don't die on us. Come on, baby. Oh, you little petering out now. Come on, buyers. Step in. Click that buy button. Look, we're getting lots of topping tails, lots of bottoming tails. That's a bad sign. That's a weak market. See how it had all these nice, big, beautiful bottoming tails? Then we got this thing here. All right, here we go. Now you're talking. More flat bottoms. We like flat bottoms. We don't like tails on the bottom in an uptrend. No tails. Keep going. Did we take one off? I think we did. We're only long one now. We had 2 in there. We took one off right there, 450. Oh, we just got stopped out with 225. So that's 310, 450, 225. Hey, we're bringing ourselves back from our little kick in the pants. All right, we got a short position here. We don't want to take the first one. Let's see if it's going to come down and give us a little ABC. We'll take the second one. Problem with waiting for that second one, sometimes it just goes wham all the way down, and you like this, and you don't get that second opportunity, and then you feel bad. Come on, give us that little pop like that. That's what we're looking for. Give us a little green bar in there. A couple green bars. We'd like to see 2 green bars. Look at all the topping tails and bottoming tails. That means it's a counter trend. If you're getting a nice long green trend like that, but there are lots of topping and bottoming tails, they're not nice flats, that's usually the counter trend. So meaning that it would probably turn and go back up again. But look at this thing still going down. We didn't ever get a little green bar for us to get in. Doggone it. Okay, we got a little horizontal line right here. That's kind of an important spot for us. See what it does right there. Turn around, come back up. First green candle to make a new high. We'll go long on a first green candle. How's that? See if it wants to turn around and go back up from here. course, first green candle might just be a little pennant as it turns and does this. And then flushes. Yeah, we'll see. Oh, we're a little bit slow to push the button. I was drawing my pictures. 45, we got 15 minutes till the market closes. I should have pulled my button a lot quicker than that. I was just sitting here drawing stupid arrows. Man, pay attention to what you're doing. I was teaching my lines. All right, at least we got our trailing stop in there. Looks like, what's it going to do? Nobody knows. Step right up. Play the game. Throw some darts at those balloons. Oh, that's a petering out on us. Come on, don't die on us. Oh. We're going to give it a shot to the short side. Or is this just going to be a bounce to the upside? We don't know. Nobody knows. Could be an ABC to the bottom side. Oh, what's this? Down here like that? Come on. I was trying to do this one. Could be a little ABC like that, or it could be a little reversal like this, and then go back up. But this one's starting to flush, so we got in that one. Okay, here we go. Now we're down 513, so let's put this in here. Oh, you don't. Oh, wimpy market. $125. It's better than a stick in the eye. So we're down still $388. You think we can get that back here before the end of the session? What's it doing here? What's it doing here? Here's the VWAP down here. So it'll probably go down to the VWAP. Let's see if that bar finishes off. Very small risk right there. Oh, if we can get in quick. Come on, buddy. Go down to the VWAP. That's all we ask. Down here to the VWAP. Now we're down $388. Let's put $388 right on the, 300. Moving 388 right in there. If it'll touch that, that'll give us our money back. Come on. Almost touched it. Look how close it was. Come on. Touch it. There we go. See? Back to $37. Now we can just let that baby run. Oh, and it stopped us out. Stopped us out with a $212. So we're up $249. We got our $1,000. We were down $1,000 at one point, weren't we? Well. We got our little trend lines in there and our little shelves. Look at that. 1, 2, 3 of those in a row. Now we're getting one this way. Let's wait and see what it does. Came all the way back down to the VWAP, didn't it? All the way back down to the rubber band. See how it just went across the rubber band? See that? It acts like it comes down here and then it goes back to the rubber band. And then it went above the rubber band like this, just like a rubber ball. And then what did it do? Turn around, came back to the rubber band, just like that. All right. So make sure you keep in mind what that rubber band is. It's kind of, the VWAP is kind of like the rubber band. The market likes to dance around it. See that? See, it keeps like to get pulled back to that blue line. You go back here, look at that. So market went all the way down here, turned around, came right back up to the little rubber band. Dropped down, came all the way back to the rubber band, shot over, come back to the rubber band. See how it does that? See that? It likes that rubber band. That's like candy. It likes that candy. Look at it all the way back all day long. It just sat there and bounced around back and forth across that rubber band. So if you keep that in mind, the further away it gets from the rubber band, the more likely it is to come back to it. Okay? So that's how it works. Doesn't mean it has to. Sometimes it leaves the rubber band and leaves the rubber band in the dust. But sometimes, it's very common for it to do that. Very common. Can you guys see how much money we've made down here? Come on this side. There we go. Now you can see the numbers. You weren't seeing them. I was sitting in your way. There we go. There's our last 3 winners. And there's actually another one under there. So let's bring that up just a little bit. There we go. See, 225. 225. Then we had a little small loser. Green. All the way back down that trend, all the way back down to the VWAP. Let's go back over here and see what else we got. How's Bitcoin doing? Oh, Bitcoin popped. Let's get rid of the moving averages. Maybe. Come on. There we go. Remove that, and we're going to come in here, chart overlay. We're going to turn on the VWAP over here. Where's VWAP over here? Oh, it's right there. Look at that. Came right back. Look at that. Look at that. Look at that. You don't think it's not aware of the VWAP? You bet your hiney it's aware of the VWAP. Look at that right there. It comes right back to it sometimes and just bounces its little topping tails off of there. Its little whiskers. All right. That's the name of the game. So that's Bitcoin. Let's go back over. And there's lots of things we can trade in here. Let's look at something else. There's Mexican peso. You guys want to celebrate Cinco de Mayo and go trade some Mexican peso? Let's pull up Mexican peso just for fun. There's the Mexican peso. It's closed right now. Market's closed on Mexican peso. Is it? Or is it just really slow? Oh, it looks like it's open. If you want to buy some Mexican peso for Cinco de Mayo, there we go. There we're in this. And then we'll put our stop in there right here. This is a daily chart. No wonder it's moving slow. Let's come in here and go down and see what we just did. Come down to let's go down to a 2-minute chart. Ooh, that's a 2-minute chart. That looks the same as the daily chart. That's really weird, huh? Look at that. So we go to a daily chart. Looks exactly the same. A little bit different. Wow, that's crazy. Okay, so there we go. So we'll put our stop in here. We'll come in here, trade. How do you put a stop in? Very easy. You just drag it on the screen just like that. You don't even have to type nothing in. A lot of people have to type in, I want quantity 1, Mexican peso, 6MK25. I want it on the 2-minute chart, and I want to have this, and I want that. And they have to fill in all these things. Okay, then submit, and review, and submit. This is designed for fast execution. You just drag it on the screen, boom, it's there. You need to move it, you move it like that. You just moved it. You don't have to open up the screen. Oh, I want to cancel and replace. I want to move. I want to add, change the price. You don't have to do any of that stuff. It's right here on the screen. Just grab it and move it just like that. This is the coolest damn thing you ever saw. What? Are we down $150 on Mexican peso already? Cinco de Mayo is not being good to us. I don't want to trade Mexican peso. It's too slow. All right, come on. Let's go look at something else. We made a trade in Mexican peso for Cinco de Mayo, so can't say we didn't. All right, here we go. There's crude oil. Let's come in and look at crude oil. All right, so you can want to trade some crude oil. Can't trade Apple, can't trade Amazon, but you can trade crude oil. And that is a daily chart. So let's come down here to a 1-minute chart. And how's it going? How's it going there, crude oil? It's on the rise, it looks like to me. That's a nice little rally, little pullback, and another little rally. Is it going to keep going up? Where's the VWAP? Right there? Oh, that's the 200 period moving average. Let's go ahead and turn it off the moving averages and turn on the VWAP chart overlay. VWAP. There it is. Didn't even show up. So far off the screen. Where is it? I can't even find it. Is it above it? Oh, there it is. It's way up there. So that's bullish for us. So we come in here. We want to trade some crude oil. Come in here and hit just like that. There you go. Put your stops in automatically behind the yellow dot. And if that continues to rise, let's just put this right up here at the. Of course, market's going to close in 5 minutes. So I don't think it's going to go all the way up there in 5 minutes. Let's just see if it'll test the previous high in 5 minutes. Come on, all the way down here. Just like that. Okay, let's see if it'll do that. That's all you got to do. Just go up there and test that high. Come on, buddy. Don't go down. All right. No, it's going to come back down anyway. It already tested the high. It's like I already tested the high, Lan. You don't want to break the high for us before the market closes? Come on, do it. Well, while you're waiting, you don't have to wait. You can come over here and see what else is ready to trade. Platinum, palladium, Russell, S&P. There's silver. You want to trade some silver? How about some gold? Let's go trade silver. Here's silver. Oh, this silver's closing. So let's go to the next contract month. Silver, Comex silver. We'll go out here to the July silver. What? What's the difference? July silver. Well, contracts expire, kind of like options, and so you have to be out of them by a certain time. This is silver. So let's go. What's silver doing? Going down? Well, there's an up arrow. So down, up. Maybe we'll get it up, and then another little down. Who knows? We've only got 5 minutes till the market closes. This is silver, though. We got different times in here. Let's come into the key, and you can see over here in the key it says market close at 3 o'clock. So not for another hour. So you can trade after hours over here. Looks like it's going to go down. Charts. Let's come over here. Let's go to the trading tab. Right now, we're not getting any kind of buy signal. We got a buy signal right here, but the market looks like it still wants to come down. Not going anywhere. It's pretty quiet. Pretty quiet silver market. Hey, we got an open profit over here, $10. Oh, crude oil. Hey, we got stopped out on crude oil chart. Hey, we made 20 bucks. Yeah, it's good because in Mexican peso, we lost 70. I've lost a lot of money in Mexican peso, although I generally get some tacos out of it. So do you like Mexican food? I do. I sure do. Did you know they don't even celebrate Cinco de Mayo down in Mexico? That's an American thing. American Mexican thing. That's what I heard today anyway. I don't know. Maybe I'm wrong. That's just what I heard. Somebody said it. So, did you know they don't even celebrate? It's not that they don't have it. They do, but they don't celebrate it like a big holiday like we do here. It's still going. Crude oil's rising, on the rise. When does crude oil close? 3 o'clock. So you can trade for another hour. Still going. It's breaking above the previous high. You want to put some more money on crude oil, see if it wants to go higher? No. We're running out of time. We gotta end this thing. We're gonna end it up in the green at least. $199 today. All right. I hope you had fun. I hope you learned something. Again, we're just trying to cover a few bases in here today. We talked a little bit about the futures market, gave you a little introduction to what that kind of stuff was. Also talked about the VWAP. That's very important. We drew some trend lines, one up for every down, red to green, and multiple trend lines, longer trend lines, shorter trend lines, right? The best thing for you to do is to just get the software. You can't hurt it, and start clicking those buttons, trying things out, pushing the buttons. We can always set you back to, zero again. It's no big deal. Just get onto the software, come and join me and start to play. I got a Sunday school lesson for you today before I let you go. Here's the Sunday school lesson. Let me get out of the way here. Don't get drunk on my words. What does that mean when I say don't get drunk on my words? Sober up and take action, all right? All the education in the world won't pay the bills. Only action will. So don't just sit around here and say, well, it's fun to come and watch land trade. And I've been watching land trade for the last 2 years, and I haven't taken action. I haven't even got my software up and running yet. Or I got my software, but I haven't got the settings in it. Or I just like to sit here and watch land tell stupid jokes. No, don't get drunk on my words. Get some action. Make some things happen. Open up your account. Get little dollars in there. Push some buttons. Even if it's just, $1,000 and you can start trading on the micro mini and just trade some $2 here and $2 there, just to start getting your feet wet and try some real things. A lot of problem is a lot of people come in and they jump in too early, too quick. So don't be that guy. Don't come in here and put $20,000 in there and lose $20,000 in a week and then say, well, I'm never coming back and doing that again. That's the wrong move too. We get a lot of guys that do that, and then they want to trade, and then they paper trade for the next 5 years, right? Don't be that guy. Start small, start little, start with a couple grand, put it in, just trade the micro minis and just get used to it and just practice a little bit. And it's nice to do the demo account, and you got to do the demo account to get familiar with the software. But once you're familiar with the software, it's a disservice to continue to trade with the demo account. You need to put some real money in there and pull the trigger on real money, even if it's just tiny, 10, 20 bucks. Your goal is to make $50 a day. That would be $500 in a regular account. And if you can just make $50 a day on the micro mini, heck, you're knocking home runs, man. So if you lose 50 bucks, it's not going to kill you, right? Your wife might be pissed at you because you're not going to take her out to dinner because, hey, I lost it into the stock market instead of going and bought tacos with it. But that's the name of the game, right? Eventually you're going to start doing, and you're going to start making a little bit of money. And if you make $10 here, $10 there, and stop, don't go crazy. And you be happy with your $10. That's $100. $100 a day is life-changing for a lot of people. And people have unrealistic expectations, thinking that if they're not in here making $1,000 a day or $10,000 a day, they're not successful. No, heck no. If you walk away with this thing making an extra $500 in an entire month, that can be life-changing for many people. $500 a month extra. That's kind of like going downtown and working at the gas station, or going over to Walmart and working for, taking a couple shifts in Walmart. Nobody wants to do that. Why would you do that when you can come make $500 a month in day trading? It's a lot. Well, it might not be easier, greeter at Walmart's not that hard. Pumping gas, not that hard, but it's doable. And don't have unrealistic expectations, thinking that, if I'm not making $10,000 a day, or, if I'm not making $100,000 like Ross over there on the other channel, then I'm not going to do this. No, stop that. Stop that already. $500 a month's a lot of money. Be happy with a couple $100 a day. That's, $200 a day. That's what we come out with, goofing off to. That's happy money. Just take that money, put it into another fund and start growing that, get some dividends on it, and away you go. Do it again. Before long, you have money. All right. That's what I did. It worked for me. So that's what I'm trying to tell you. Give it a shot yourself. Don't get drunk on my words. Let's have some action in here. All right. Let's get her. Let's get her done. All right, guys. That's all I got for you. And I'm going to let you go. Let me come and see if you have any questions. Let me know. And we will see you tomorrow. Tomorrow morning, 8 a.m., bright and early. All right.
All right. That wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh, yeah. Definitely subscribe to Pitt News Magazine. You'll thank us later.